Before we dive in, a quick but critical disclaimer. I am not a licensed financial advisor, insurance agent, or legal professional. The information provided in this presentation is for educational and informational purposes only. It is not intended as and should not be understood or construed as financial, legal, or insurance advice. You should consult with a qualified professional before making any decisions based on the information in this video. Your financial situation is unique, and any choices you make should be based on your own research and the guidance of a licensed expert. Alright, let's get straight to it. The average American driver overpays for their car insurance by $417 every single year. Let that sink in. That's a new smartphone, a weekend getaway. That's a significant chunk of money you are giving away for literally no reason. And here's the kicker. The insurance companies are counting on you to do it. They've built a multi-billion-dollar empire on a simple, powerful idea. That you're too busy, too confused, or too complacent to shop around. They rely on something called the loyalty tax, a silent, creeping increase in your premium year after year, rewarding your loyalty with a higher bill. It's one of the biggest, most accepted financial traps in the country, and today we are going to dismantle it piece by piece. If you've ever felt that pit in your stomach when you open your insurance renewal and see the price has jumped 20% for no apparent reason, you know what I'm talking about. If you've ever tried to read your policy documents and felt like you needed a law degree to understand the difference between comprehensive, collision, liability, and uninsured motorist coverage, this is for you. Maybe you had one tiny fender bender, a claim that was supposed to be covered, only to be treated like a high-risk criminal and punished with a rate hike that will cost you thousands over the next few years. You feel powerless. You feel stuck. You pay the bill because what other choice do you have? Well, you have a choice. And that choice is knowledge. The entire purpose of this video is to give you that knowledge, to pull back the curtain on the auto insurance industry, and give you the power to take back control of your money. We are going to do a deep, honest, and unfiltered comparison of the top 5 auto insurance providers in the United States. No fluff, no marketing jargon, just the hard facts. By the end of this presentation, you will not only understand what all those confusing terms mean, but you'll also know exactly which company is likely the best fit for your specific needs, your car, your driving habits, and most importantly, your budget. You will have a crystal clear roadmap to not just choosing a policy, but to choosing the right policy, and potentially putting that $400, $500, maybe even $1,000 a year back where it belongs, in your pocket. To do this right, we're not just looking at who has the catchiest jingle or the funniest commercials. We're going to be ruthless in our analysis, judging each of these giants on the 5 criteria that truly matter. First, and for many most importantly, price. Who consistently offers the most competitive rates for different types of drivers, from a teenager with their first car to a seasoned commuter with a perfect record. Second, customer service. When you have a question or a problem, can you actually talk to a helpful human being? Or are you thrown into an endless automated phone loop from hell? Third, the claims process. This is the moment of truth. When you're stressed out after an accident, is their claims process smooth, fast, and fair? Or is it a bureaucratic nightmare designed to wear you down and pay you out as little as possible? Fourth, technology and digital tools. How good is their app? Can you easily manage your policy, file a claim, and get roadside assistance from your phone? Or is their tech stuck in the dial-up era? And finally, number 5, the X factor. What are the unique perks, discounts, or special programs that set them apart from the competition? Things like accident forgiveness, telematics programs that reward good driving, or unique coverage options you won't find anywhere else. Now you might be thinking, is it really that big of a deal? It's just car insurance. But here's the reality in today's economy. It's a massive deal. With the cost of everything from gas to groceries going up, and with the price of car repairs, both parts and labor skyrocketing due to inflation and supply chain issues, having the wrong insurance policy is no longer just an inconvenience. It's a serious financial risk. One major accident without the right coverage can be financially devastating, wiping out your savings or plunging you into debt. The difference between a good policy and a bad one can be the difference between a stressful situation being resolved quickly and a stressful situation turning into a life-altering financial crisis. The stakes have never been higher. So we're going to cut through the noise. We're going to ignore the celebrity endorsements and the billion-dollar advertising campaigns. We're going to look at the data, the customer reviews, the fine print, and the real-world performance of these companies. We're arming you with the information you need to make an educated, confident decision. The battle for your business is fierce, and these companies are all vying for your dollar. It's time you understood the strengths and weaknesses of each contender, so you can walk away the winner. So, who are these titans of the industry? Who are the top players we're putting under the microscope today? We're talking about the household names you see everywhere, the companies that collectively insure a massive portion of the American driving public. We'll be breaking down Geico, Progressive, State Farm, Allstate, and USAA. Each has a different philosophy, a different business model, and a different set of pros and cons. And we're starting with a company that spends over $1 billion a year to make sure you remember its name. A giant known for its direct-to-consumer model and a charming little gecko. Let's dive headfirst into our number one contender, Geico, the government employees insurance company. That's what Geico actually stands for. It's a little-known fact that reveals their entire origin story. Back in 1936, Leo Goodwin founded the company on a radical premise. What if you only sold insurance to the most responsible, lowest-risk drivers? At the time, he decided that was federal government employees and military officers. By targeting this niche, ultra-safe group, he could undercut the competition and offer drastically lower rates. Of course, today, Geico is open to everyone. But that core DNA, that obsession with cutting costs to lower premiums, is still the engine driving the entire company. And it all starts with their most famous promise. 15 minutes could save you 15% or more. But what does that actually mean? It's not just a catchy slogan. It's a mission statement for their entire business model. Geico operates on a direct-to-consumer basis. This is critical to understand. Unlike many of their competitors, there are very few physical Geico offices with agents you can walk into. They've surgically removed the middleman. By doing this, they save a fortune on commissions and overhead for thousands of brick-and-mortar locations. That savings, in theory, is passed directly on to you. The 15 minutes part refers to their streamlined, hyper-efficient online quoting system. They've invested hundreds of millions of dollars to make it one of the fastest and easiest in the industry. You go to the website, you punch in your info, and their algorithm crunches an insane amount of data, your age, your car, your zip code, your driving history, to spit out a number. It's fast, it's frictionless, and it's designed to get you from curious shopper to policyholder before you have time to second-guess it. This model is brilliant for a certain type of customer. If you're self-sufficient, comfortable managing your finances online, and you just want the best possible price without any fluff, Geico can feel like a revelation. Their mobile app is consistently ranked as one of the best. You can view your ID cards, pay your bill, request roadside assistance, and even start a claim, all from your phone. It's a seamless digital experience. But let's talk about what you're actually buying. The policy itself. Geico offers all the standard coverages you'd expect. Liability, collision, comprehensive, uninsured motorist protection. But they have a few standouts worth mentioning. Their emergency road service is excellent and often cheaper than a standalone AAA membership. It covers you for towing, jump starts, flat tires, and even if you lock your keys in your car. They also offer rental reimbursement, which is a must-have. If your car is in the shop after a covered accident, they'll help pay for a rental so you're not stranded. But here's the one that really sets them apart. Mechanical breakdown insurance, or MBI. Think of it as an extended warranty for your car, but from your insurance company. It covers repairs to all mechanical parts of a new or leased car that's less than 15 months old and has fewer than 15,000 miles. It's far more comprehensive than a typical powertrain warranty and often comes with a much lower deductible, usually around $250. For the right person with a new car, MBI alone can be a compelling reason to choose Geico. Now, how do you get that price down? Discounts. This is where the game is really played. Geico has a mountain of them. Of course, there are the basics, having a good driving record, bundling your auto and home or renter's insurance, being a good student. But they have others that are more specific. True to their roots, they still offer significant discounts for military members and federal employees. They have discounts for having safety features like airbags and anti-lock brakes. And then there's the big one, Drive Easy. This is their telematics program. You agree to let the Geico app on your phone monitor your driving habits. It tracks things like hard braking, sharp turns, speeding, and phone use while driving. If you prove you're a safe driver, you can earn a substantial discount, up to 25% in some states. But this is a double-edged sword. First, there's the privacy concern. You are giving your insurance company a direct window into your daily life. Second, it can actually raise your rates. If the app flags you as a risky driver, you can bet your premium will go up at renewal time. It's a gamble. Trade your privacy for a potential discount. So, the price is low, the app is great, the discounts are plentiful. It all sounds perfect, right? But here's the catch. You only find out how good your insurance company really is when the worst happens. The moment of truth for any insurer is the claims process. Let's imagine a scenario. You're in a minor fender bender. It's clearly the other person's fault. With Geico, the process can be incredibly smooth. You open the app, upload a few photos of the damage, answer some questions, and get the process started within minutes. For these simple, clear-cut claims, Geico's efficiency is their greatest strength. They have a massive network of approved body shops, and they can often get your payment processed and your car repaired with astonishing speed. It's a well-oiled machine designed to handle high volumes of straightforward incidents. But what happens when it's not straightforward? What if the other driver is uninsured? What if fault is disputed? What if you have serious injuries? This is where the cracks in the direct-to-consumer model can start to show. Remember how they cut out the middleman to save money? That middleman was your dedicated agent. The person who knew your name, who you could call directly, and who would advocate on your behalf. With Geico, you don't have that. You have a call center. A very large, very efficient call center, but a call center nonetheless. When your claim gets complicated, you might speak to a different adjuster every single time you call. You have to re-explain your situation over and over. You're not a client, you're a policy number. This can be incredibly frustrating and stressful during what is already one of the most difficult times in your life. While their adjusters are trained professionals, you lose that personal touch, that feeling that someone is truly in your corner. Customer service ratings for Geico's claims process are often polarized for this very reason. People who have simple claims rave about the speed. People with complex claims often complain about feeling lost in the system. So who is Geico for? Geico is the undisputed champion for the confident, self-reliant, price-conscious consumer. If you have a clean record, a standard vehicle, and you're comfortable managing everything through an app, you will be hard-pressed to find a better combination of price and convenience. You are their ideal customer, and they have built their entire empire to serve you. However, if you want a personal relationship with an agent, if you have a more complex situation like a classic car or a spotty driving history, or if you simply value having a dedicated advocate to guide you through a difficult claim, the money you save with Geico might not be worth the potential frustration. Their model is built on efficiency and scale, not on white-glove, personalized service. It's a trade-off. You're trading a personal relationship for a lower premium. For millions of Americans, that is a fantastic deal. But it's not for everyone. And it raises a fascinating question. What if you want the exact opposite? What if you're willing to pay a little more for that peace of mind, for a local agent who knows your community, who you can sit down with face to face? Well, our next contender built its entire identity around that very idea, creating a nationwide army of agents to be there, in your town like a good neighbor. State Farm. You knew it was coming. That jingle is practically etched into the American subconscious, right alongside the national anthem and the McDonald's baby. For nearly a century, State Farm has dominated the insurance landscape, not by being the cheapest, not by having the flashiest commercials, though Jake has his moments, but by betting the entire farm, no pun intended, on one single idea. That in your moment of crisis, you'd rather have a handshake than a hyperlink. They are the undisputed heavyweight champion of the agent-based model. While companies like Geico and Progressive were building massive call centers and slick mobile apps, State Farm was doubling down on planting a flag in every town, on every other main street across America. Their strategy is simple and profound. Insurance isn't just a transaction, it's a relationship. They believe that when your car is totaled on the side of a highway at 2 a.m., you don't want to navigate a phone tree. You want to call a person you've met, a person whose kid might even go to the same school as yours. And let's be honest, there is a powerful, almost primal comfort in that. This is the core of State Farm's value proposition. You're not buying a policy, you're hiring a guide. Your agent is supposed to be your advocate, your translator for all the confusing jargon like comprehensive, collision, and uninsured motorist bodily injury. When you need to add a new teenage driver to your policy, a terrifying moment for any parent's wallet, you're not just clicking boxes on a website. You're having a conversation with someone who can say, okay, here's the deal. Your rates are going to go up, but let's talk about the good student discount, and have you heard about our Steer Clear program? It could save you a significant amount. This proactive, personalized advice is something an algorithm just can't replicate. This model truly shines during the claims process. This is the moment of truth for any insurance company. Imagine a complex accident, a multi-car pileup where fault is unclear. With the direct-to-consumer insurer, you're often on your own, reporting the claim online or to a faceless call center agent who is reading from a script and handling dozens of other claims that day. With State Farm, the first call is to your agent. They know you. They can immediately offer guidance, help you understand the next steps, and interface with the claims department on your behalf. They act as a buffer, a concierge, shielding you from the most stressful parts of the process. For people who find that kind of thing overwhelming, this service isn't just a nice perk. It's the entire reason they choose State Farm, and they will happily pay a premium for it. So, who is the ideal State Farm customer? It's someone who values service over savings. It's the person who says, I want one person to handle my car, my house, and my life insurance, and I want them all to be in sync. The bundling power of State Farm is immense. They are a true one-stop shop, and their agents are incentivized to get you into multiple policies. This is where their pricing can start to look competitive. If you're just insuring a single car, you will almost certainly find a cheaper rate elsewhere. But if you're a homeowner with 2 cars, maybe an RV, and you're thinking about a life insurance policy for your family, suddenly, State Farm's multi-policy discounts can slash your overall bill, making them a surprisingly affordable option. They're also a fantastic choice for people with more complex insurance needs. Maybe you own a small business and use your vehicle for work, or you have a classic car that requires a special kind of coverage. These aren't cookie-cutter situations. An agent can manually tailor a policy to your specific, unique circumstances in a way that an online form simply can't. They can ask the right questions you didn't even know you needed to answer. But, and this is a very, very big but, the entire good neighbor promise hinges on one single unpredictable variable: the quality of your specific agent. State Farm isn't one monolithic company. It's a federation of over 19,000 small businesses. Your experience is almost entirely dependent on the competence, responsiveness, and personality of the one agent whose office is down the street. A great agent is a godsend. They'll call you for an annual review, they'll fight for you during a tough claim, they'll remember your name when you walk in the door. They are everything the company promises. A bad agent, however, can turn the dream into a nightmare. A bad agent is someone who doesn't return your calls, someone who gives you poor advice just to make a sale, someone who is more interested in their golf game than your policy review. And if you get stuck with one of them, the entire system breaks down. You're paying a premium price for a relationship, but the other person isn't holding up their end of the bargain. And untangling yourself from that agent to switch to another one can be a bureaucratic headache. You can't just log in and change your preferences. You have to actively break up with your insurance agent. This brings us to the other major consideration: technology. While State Farm has invested heavily in its app and website, its DNA is still analog. Its tech often feels like it was built on top of an older agent-focused system, rather than being designed from the ground up for the digital consumer. The app is functional. You can pay your bill, view your ID cards, and even start a claim. But compared to the slick, intuitive, almost game-like experience of some of the newer players, it can feel a bit clunky. If you are someone who wants to manage every aspect of your life from your phone with maximum efficiency and minimal human interaction, State Farm's model might feel slow and restrictive. Let's talk about their signature discount program. Drive safe and save. Like Progressive Snapshot, it uses a smartphone app or a dedicated beacon to monitor your driving habits. It tracks things like acceleration, braking, cornering, speed, and phone use. Do well, and you can earn a discount of up to 30%. This is a solid program, and it's a great way for safe drivers to claw back some of that premium they're paying for the agent model. But it also means giving your insurance company a direct window into your daily life, tracking your every move in the car. For some, that's a fair trade for a discount. For others, it's a major privacy concern. So, what's the final verdict on the giant in the room? State Farm is the embodiment of traditional, relationship-based insurance. It's built for stability, for trust, and for human connection. If you are the kind of person who wants a long-term partner for all your insurance needs, who is willing to pay a bit more for the peace of mind that comes with having a dedicated professional in your corner, then State Farm is, without a doubt, one of the best choices you can make. The potential for a fantastic, personalized experience is absolutely there. However, if you are a price-first shopper, a digital native who is perfectly comfortable managing your own policy online, and you don't have complex needs, you will likely find better value and a more streamlined experience elsewhere. You're paying for an agent whether you use them or not. The question you have to ask yourself is, Is that a feature you're willing to pay for? Or is it just expensive overhead? Now, what if you want the best of both worlds? What if you want the security of a massive, established company, but with a relentless focus on technology and saving you money through a direct-to-consumer model? What if you want to take the agent out of the equation entirely and deal directly with the source? Well, our next company didn't just embrace that model. They practically invented it, using a charming British gecko to conquer the American airwaves. That's right, we're talking about the Government Employees Insurance Company, better known by its four-letter acronym that has been drilled into our heads by billions of dollars in advertising, Geico. And while that little green gecko is now an icon, the real revolution Geico started had nothing to do with reptiles and everything to do with fundamentally changing how you buy car insurance. They looked at the traditional model, the agent in your town, the brick-and-mortar office, and asked a simple, devastating question: what if we just got rid of it? Geico is the original, the titan of the direct-to-consumer insurance model. This is their entire philosophy, the bedrock on which their empire is built. Unlike State Farm or Allstate, where your primary relationship is with a local agent who acts as a middleman, Geico's model is built on you dealing directly with the mothership. There is no middleman. It's you, your phone or computer, and the massive corporate entity of Geico. This was a radical idea when they truly brought it to the mass market. It cut out a huge layer of cost, commissions, office overhead, the whole 9 yards, and in theory they could pass those savings directly on to you, the customer. This leads us to Geico's number one, undisputed, heavyweight champion selling point: price. Their entire marketing strategy for decades has revolved around one single, powerful promise, a slogan so effective it's become a cultural touchstone. 15 minutes could save you 15% or more on car insurance. And for millions of Americans, this promise holds true. Because they don't have to pay a nationwide network of thousands of agents, their operating costs are significantly lower. This structural advantage often allows them to offer some of the most competitive rates on the market, especially for drivers with clean records. If you're a straightforward customer, good driving history, standard car, no complex needs, hopping on Geico's website or app is frankly a masterclass in efficiency. Their quoting process is incredibly slick, fast, and easy to understand. You can go from a curious shopper to a fully insured driver with digital proof of insurance in your email, all in the time it takes to drink a cup of coffee. You don't need to schedule an appointment, you don't need to make a phone call, you don't need to talk to a single human being if you don't want to. For a generation of consumers who value speed, convenience, and a do-it-yourself approach, this is a massive, massive win. And their tech-first approach doesn't stop at the quote. Geico's mobile app is consistently ranked as one of the best in the industry. It's a central command hub for your policy. You can pay your bill, access your insurance ID cards, make changes to your coverage, and even request roadside assistance with a few taps. Need to file a claim? You can start the process right in the app, upload photos of the damage, and get the ball rolling immediately. This level of digital empowerment is at the core of the Geico experience. They put the tools directly in your hands, betting that you'd prefer the efficiency of self-service over the hand-holding of a traditional agent. But this brings us to the great trade-off. The very thing that makes Geico so appealing, the lack of an agent, is also its most significant potential weakness. When everything is going smoothly, it's a dream. But what happens when things get complicated? What happens when you're in a serious accident, you're shaken up, and you're not sure what to do next? With an agent-based model, you have one person to call: your agent. Someone who knows your name, knows your policy, and can act as your advocate and guide through the confusing, stressful claims process. With Geico, you don't have that person. You have a 1-800 number. You have a call center. And while the person on the other end might be perfectly nice and competent, they are not your person. The next time you call, you'll likely speak to someone completely different. This can lead to an experience that feels impersonal and fragmented, especially during a high-stress claim. You might feel like a number, a policy ID, rather than a valued client. This is the fundamental compromise of the direct-to-consumer model. You trade the potential for a personal relationship and dedicated advocacy for a lower price and digital convenience. There's no right or wrong answer here. It's a matter of what you personally value most. Let's talk about that claims process, because at the end of the day, that's the product you're actually buying. Geico's claims handling reputation is mixed. It's not that they're bad. They process millions of claims a year. But in major industry satisfaction studies like those from J.D. Power, they tend to land squarely in the middle of the pack. They typically score below premium service companies like USAA or Amica, but are often on par with or slightly above other large-scale competitors. For simple, straightforward claims, a cracked windshield, a minor fender bender where fault is clear, the process is often incredibly efficient. Their app-based claims filing and network of pre-approved body shops can get you back on the road quickly. However, the complaints you often see online center on more complex situations: accidents with disputed fault, claims involving injuries, or situations requiring extensive negotiation with the other party's insurance. This is where the lack of a personal agent can really be felt. Navigating these murky waters through a call center can be frustrating, and some customers report feeling like they have to fight harder to get a fair settlement compared to carriers known for their white glove service. So, who is Geico the perfect fit for? Geico is an absolutely fantastic choice if you are a self-reliant, tech-savvy consumer. If you're comfortable managing your accounts online, prefer an app over a phone call, and you want to do it all yourself, Geico's platform is built for you. It's also ideal for the budget-conscious driver with a relatively clean record. If your primary goal is to secure reliable coverage that checks all the legal boxes for the lowest possible price, Geico should be one of the very first quotes you get. You are their target audience. However, you might want to think twice about the get-go if you're the kind of person who values personal relationships and expert guidance. If the idea of explaining a complicated accident to a different person every time you call gives you anxiety, the direct model might not be for you. If you have complex insurance needs, maybe you own a business, have a classic car, or need a high-value umbrella policy, the advice of a dedicated agent who understands your entire financial picture can be invaluable. And finally, if your absolute #1 priority is having the smoothest, most stress-free claims experience possible, no matter the cost, you may find that Geico's middle-of-the-road satisfaction ratings aren't quite what you're looking for. Geico is a powerhouse for a reason. They identified a massive segment of the population that was willing to trade personal service for price and convenience, and they executed that vision flawlessly. They are the benchmark for the direct insurance model. So we have the old guard, the agent-based giants who offer a personal touch, and we have the direct-to-consumer disruptor that puts price and technology first. But what about a company that tried to do both? A company that not only embraced the direct model to compete with Geico, but also innovated in a way that forced the entire industry to become more transparent by doing something completely unheard of at the time, showing you their competitors' prices right on their own website. That level of confidence, or maybe audacity, changed the game all over again. And that company, of course, was Progressive. They didn't just stumble upon this idea. It was a calculated, strategic masterstroke born from a deep understanding of human psychology. Their bet was simple. In a world of confusing quotes and hidden fees, the company brave enough to be transparent would win trust, even if they didn't always have the lowest price. They knew that most people don't just buy the cheapest option, they buy the best value. By showing you the entire landscape, Progressive positioned itself not as a seller, but as a trusted advisor. It was like a car salesman saying, "Look, the Toyota down the street might be a little cheaper, but let me show you why our Honda is a better long-term investment." Suddenly, the power dynamic shifted. You weren't being sold to, you were being consulted. And that single move forced a ripple of change across the industry, making comparison shopping the new standard and cementing Progressive's place as a major player. But while Geico and Progressive were fighting a high-tech war of online quotes and catchy mascots, another giant was quietly holding its ground, relying on a strategy that feels almost ancient by comparison: a human touch. This company built its empire not on clicks and algorithms, but on handshakes and local offices. I'm talking about Allstate, and their slogan isn't just one of the most famous in American advertising history. It's the key to understanding their entire philosophy. "You're in good hands." That phrase wasn't cooked up in a marketing meeting. The story goes that it came from Allstate's general manager back in the 1950s, whose young daughter was sick with a fever. As he held her, she squeezed his hand and looked up at him, and he thought to himself, "She feels safe because she's in her father's good hands." It's a powerful primal image of protection and trust. And Allstate has built every brick of its business on that single emotional promise. While Geico wants to save you money and Progressive wants to be your transparent advisor, Allstate wants to be your neighbor. The person you call not just when you have a wreck, but when you buy a new house, have a baby, or need to plan for the future. This is all made possible by their core business model: the local Allstate agent. This is the fundamental difference, the great dividing line between Allstate and the direct-to-consumer companies we've discussed. With Geico or Progressive, you are the customer of a massive national corporation. With Allstate, you are technically the customer of that corporation, but your day-to-day reality is that you are the customer of Sarah down on Main Street, or David in the suburban office park. This agent is a small business owner, a franchisee whose success is tied directly to keeping you happy. For a certain type of person, this is the gold standard. When a hailstorm shatters your windshield, you're not calling an 800 number and getting routed to a call center in another state. You're calling a person you've met, whose kids might go to the same school as yours. They know your name, they know your policy, and they can guide you through the claims process personally. They can proactively review your policy once a year to make sure your coverage still makes sense, and they can bundle your home, auto, and even life insurance into one neat package, managed by one point of contact. This is the good hands promise in action. It's high touch, it's personal, and for many, the peace of mind that comes with it is invaluable. But those hands, they aren't free. That local agent, that beautiful office, that personalized service, it all has to be paid for. And it's paid for through your premiums. This is the inherent trade-off with Allstate. Generally speaking, they are rarely the cheapest option on the market. The cost of maintaining thousands of local agents and their support staff is baked into the price of your policy. So the central question you have to ask yourself when considering Allstate is this: how much is that personal relationship worth to you? Are you willing to pay, say, 10 or 15% more on your premium for the comfort of having a dedicated agent to call? If you're a DIYer, someone who is comfortable managing everything online, who diligently shops for new insurance every 6 months to find the absolute lowest rate, Allstate is probably not for you. You'll likely see their model as an unnecessary and expensive layer between you and your policy. But if you're someone who finds insurance confusing, who values expert guidance, and who wants a long-term relationship with a professional who can handle all your insurance needs under one roof, then Allstate becomes an incredibly compelling choice. Beyond the agent model, Allstate has also been an innovator in its own right, particularly in the realm of technology and rewards. Take their DriveWise program. This is their telematics option, where you use a smartphone app to track your driving habits. It monitors things like your speed, braking, and the time of day you drive. Now, this can feel a little big brother to some, but for safe drivers, the payoff can be substantial. Allstate offers an immediate discount just for signing up, and then you can earn cash back every 6 months based on your good driving score, up to 25% in some states. This transforms your insurance from a fixed cost into a dynamic one that you have some control over. It gamifies safe driving. They also have features designed to reinforce that good hands promise. One of their most popular is accident forgiveness. The concept is simple. If you've been a loyal, accident-free customer for a certain period, Allstate will forgive your first at-fault accident, meaning your rates won't go up. This can be a huge stress reliever. We all know that sinking feeling after a minor fender bender, thinking not just about the damage, but about how much your insurance is about to skyrocket. Accident forgiveness is Allstate's way of saying, hey, you've been a great customer. We'll give you a mulligan on this one. But here's the inside baseball on Allstate you need to know. Their pricing model is incredibly sensitive to your credit score. While nearly all insurers use a credit-based insurance score to help determine rates, Allstate seems to place an even heavier emphasis on it than many of its competitors. This means that if you have excellent credit, you might find Allstate's rates to be surprisingly competitive, even with the agent model. But if your credit is average or poor, you could be looking at a premium that is significantly higher than what you'd get from a company like Geico. It's a critical factor to be aware of. So, who is the ideal Allstate customer? It's someone who sees insurance not as a commodity, but as a professional service. It's the person who wants to build a relationship, who bundles multiple policies, and who values the peace of mind of having an expert in their corner. They are often more established, perhaps homeowners, and are willing to pay a premium for stability and service over rock-bottom prices. Allstate embodies the traditional, trust-based model of insurance. It's a powerful and enduring approach. But there's another company out there that takes the concept of trust and community to an entirely different level. It's a company that consistently ranks #1, year after year, in virtually every customer satisfaction survey ever conducted. Their members are so fiercely loyal, they often stay with the company for life, passing their membership down to their children like a family heirloom. It's widely considered the best insurance company in America, and there's a very good chance that you're not allowed to join. That company is USAA, the United Services Automobile Association. And the reason you might not be allowed to join is because it isn't a company you choose. It's a company you have to qualify for. USAA was founded exclusively to serve the members of the U.S. military and their families. It's a private club, and membership is a privilege earned through service to the country. If you are active duty, a veteran, an honorably discharged former military member, or the spouse or child of one, the doors are open. For everyone else, it remains an aspiration, the undisputed gold standard of the insurance world that you can only look at from the outside. So what makes them so special? Why does a company that doesn't even advertise to the general public consistently dominate every single customer satisfaction survey, year after year? The answer isn't in a clever marketing gimmick or a lowball introductory rate. The answer is baked into its very origin. Picture this. It's 1922 in San Antonio, Texas. A group of 25 U.S. Army officers are trying to get car insurance. But the insurance companies of the day took one look at them and basically laughed them out of the office. Army officers, they said, were a high-risk group. They moved around too much, they were young, and they drove their cars hard. As a result, they were either denied coverage outright or quoted premiums that were astronomically high. These officers were being penalized for the very nature of their service. So, they did what highly trained, resourceful people do when faced with an unfair system. They decided to build their own. They pooled their own money, sat down at a hotel in San Antonio, and agreed to insure each other's vehicles. There were no shareholders to please, no profit targets to hit. The entire mission was simple: provide the best possible service and coverage, at the lowest possible cost, to a group of people who deserved it. They weren't customers, they were members. And that single distinction is the key to understanding everything about USAA. Unlike every other company on our list, USAA is not a publicly traded corporation. It's a member-owned reciprocal inter-insurance exchange. That sounds complicated, but what it means is that the people who buy the insurance are the ones who own the company. The profits don't go to Wall Street investors. They go back to the members. This happens through annual dividends, lower premiums, and most importantly, by reinvesting that money into creating a legendary customer service experience. When a USAA member calls with a claim, they aren't talking to a random call center employee reading from a script. They're talking to someone who understands the unique language and lifestyle of the military. They know what a PCS, or permanent change of station, is and the chaos it entails. They understand the stress of a deployment. There are countless stories of USAA going above and beyond. A soldier deployed in Afghanistan whose car is totaled back home? USAA doesn't just cut a check. They've been known to help arrange for a new vehicle to be waiting at the airport for them the moment they return. A family's home damaged in a hurricane? USAA adjusters are often the first on the ground, sometimes with mobile command centers, cutting checks on the spot so families can buy food, clothing, and find shelter immediately. This isn't just good service. This is an organization fulfilling its founding promise to take care of its own. Their entire business model is built on trust and loyalty, not transactions. Let's talk about the auto insurance itself. The rates are consistently among the lowest in the industry, especially for members with good driving records. But the real value is in the details, the features designed specifically for military life. Are you being deployed overseas and need to store your car for 6 months? USAA offers a massive discount, sometimes up to 90%, on your premium for a garaged vehicle. Are you stationed on a military base? You can get a discount for that. They also offer accident forgiveness as a standard feature for members who have been with them for over 5 years with no at-fault claims, which is a premium add-on at most other carriers. Their claims process is renowned for being brutally efficient and fair. They utilize technology heavily, with an app that allows you to manage everything from filing a claim with photos to ordering a rental car. But when you need to talk to a human, you get one, and that person is empowered to solve your problem. They don't have to check with a manager. This creates a sense of security that is frankly priceless. And the ecosystem extends far beyond just auto insurance. USAA offers banking, credit cards, mortgages, personal loans, and investment services. Members can, and often do, run their entire financial lives through USAA. This creates a powerful feedback loop. The more you use USAA, the more they understand you, and the better they can serve you. It's why people don't just have a USA policy, they are USA members for life. Now, for the sake of fairness, we have to talk about the downsides. The most obvious one, of course, is the giant wall around it, the eligibility requirement. The vast majority of the American public simply cannot join. It feels a bit like reviewing a 5-star restaurant that you need a special key to get into. Secondly, if you're someone who values a face-to-face relationship with a local agent, USAA might not be for you. They have a handful of financial centers, mostly near major military bases, but they are not like State Farm or Allstate with an agent in every town. They are a direct-to-consumer model, operating primarily online and over the phone. For most people, this is a huge plus. It keeps their overhead low and their service efficient. But for some, the lack of a physical presence is a deal-breaker. Finally, are they always 100% of the time the cheapest option? Not necessarily. For certain risk profiles, say a very young, eligible driver with a couple of speeding tickets, a high-risk insurer might actually offer a lower, albeit much lower quality premium. But for the vast majority of its eligible members, USAA offers a combination of price, service, and reliability that is simply unmatched by any other carrier on the market. They are the benchmark, the standard by which all other insurance companies are judged. So for the select few who qualify, the choice is almost a no-brainer. You join USAA, you stay with USAA, and you pass that membership down to your kids. It's less of a consumer choice and more of a family tradition. But that leaves a critical question for the rest of us. For the millions of Americans who didn't serve in the military, is it possible to find an insurance company that even comes close to this model? Is there a company out there that puts its members' interests first, that was founded on a principle of service rather than profit? A company that aims to replicate that same feeling of belonging and trust for the general public? That search brings us to our number 2 contender. A company that started with a remarkably similar mission to USAA, but for a completely different group of public servants. A company that has grown into a titan of the industry, all while trying to hold on to the core values it was founded on. That company is Geico, the government employees' insurance company. Today, you know them for a charming British gecko, a band of perpetually offended cavemen, and a slogan so pervasive it's become a cultural touchstone. But behind the billion-dollar ad campaigns and the talking lizards is a story of Depression-era grit, a revolutionary business model, and a chance encounter on a Saturday that would change the course of American investing forever. Back in 1936, the world of insurance was a monolith. It was a business of agents, of commissions, of face-to-face sales in living rooms and offices. But a man named Leo Goodwin Sr. saw a crack in that monolith. He looked at the data and had a simple, powerful insight. Not all drivers are created equal. He theorized that certain groups of people were statistically safer drivers. They had fewer accidents, filed fewer claims, and were therefore less risky to insure. His prime targets? Federal government employees and top-tier, non-commissioned military officers. He believed these were stable, responsible individuals, and by insuring only them, he could create a low-risk pool that would allow him to offer dramatically lower prices than his competitors. But the real genius was in the how. To pass those savings on, he decided to cut out the middleman entirely. No agents, no commissions. He would sell directly to the customer through mail and telephone. This direct-to-consumer model was practically unheard of. It was the Warby Parker or Casper mattress of its day. A disruptive idea that threatened the entire established order. Leo and his wife Lillian weren't building this empire from a gleaming skyscraper. They worked from their home, often until 1 or 2 in the morning, with Lillian handling the bookkeeping and Leo managing the underwriting, all from their kitchen table. They were building a titan one policy at a time, based on a foundation of data and efficiency. For years, Geico grew steadily, a well-regarded but relatively quiet company, a secret shared among government employees. Then, in 1951, a 20-year-old student from Columbia University took a train from New York to Washington, D.C. on a Saturday. He was a student of the legendary investor Benjamin Graham, and he'd noticed that his professor was the chairman of a small insurance company called Geico. This young man, a ravenous learner, wanted to understand what made it tick. He showed up unannounced at Geico's locked headquarters. A custodian eventually let him in, and directed him to the only executive working that day, Lorimer Davy Davidson, a future CEO. For the next 4 hours, Davidson, likely amused by this kid's sheer audacity, patiently explained the entire insurance business and Geico's unique model. The young man listened, captivated. He wasn't just hearing about premiums and claims. He was seeing the architecture of a perfect business. He saw a company with a huge moat, a durable competitive advantage. The low-cost structure allowed them to offer the best prices, which attracted the best, lowest-risk customers, which in turn kept their costs down, allowing them to offer even better prices. It was a virtuous cycle, a self-perpetuating money machine. The young man left that meeting so convinced, He went back and put more than half his entire net worth into Geico stock. That young man's name was Warren Buffett, and that single Saturday meeting would eventually lead to his company, Berkshire Hathaway, acquiring Geico outright, making it the crown jewel of his financial empire. So what does this history mean for you, the person just trying to get a fair price on your car insurance? It means everything. The DNA of Leo Goodwin's original vision and Warren Buffett's financial discipline is baked into the Geico of today. Let's start with the biggest pro: price. Geico's entire identity is built around being the low-cost leader. That direct-to-consumer model they pioneered is now supercharged by technology, allowing them to operate with incredibly low overhead. For many drivers, especially those with clean records, Geico will consistently offer one of the lowest, if not the lowest, quotes you'll find. That 15 minutes could save you 15% or more isn't just a catchy jingle. It's the core promise of their business model, and they often deliver on it. The second massive advantage is their technology and ease of use. Geico's mobile app and website are without question best in class. They are intuitive, fast, and comprehensive. You can get a quote, buy a policy, pay your bill, get your ID cards, and most importantly, file a claim, all from your phone, often without ever needing to speak to a human being. For the self-sufficient, tech-savvy consumer who values convenience and efficiency, the Geico user experience is an absolute dream. It's a frictionless system that respects your time. And that leads to the third pro: stability. Being owned by Berkshire Hathaway means Geico is backed by one of the most financially sound and respected companies on the planet. This isn't some fly-by-night startup that might fold after a major catastrophe. They have deep pockets. When a major hurricane hits or a massive hailstorm pummels a city, you can be confident that Geico has the capital to pay out every single legitimate claim. That peace of mind is a tangible, valuable asset. But as with any company this massive, there's another side to the story. The very things that make Geico great can also be the source of its biggest weaknesses. That direct-to-consumer model, the one that saves you money, it means you have no dedicated local agent. There's no one person you can call who knows your name and your history. When you have a problem, you're calling an 800 number and speaking to the next available representative in a massive call center. For some, that's fine. For others who value a personal relationship and a trusted advisor, it can feel cold and impersonal. This can become especially apparent during the claims process. While their app makes filing a claim easy, the follow-through can be a mixed bag. A quick search online reveals a common narrative: customers who feel the process is slow, who have trouble getting a hold of their assigned adjuster, or who feel the initial settlement offers are too low. Because they operate on such a massive scale and are so focused on cost control, the claims experience can sometimes feel like you're just a number in a very large, very efficient machine. It lacks the human touch that many people crave during a stressful post-accident period. And finally, that low price promise? It's not universal. While they are a fierce competitor for drivers with perfect records, if you have a few tickets, an at-fault accident, or a DUI on your record, Geico's rates can skyrocket. Their underwriting model is finely tuned to reward low-risk drivers, and it can be unforgiving to those who fall outside that ideal profile. Their marketing implies they're the cheapest for everyone, but the reality is you absolutely must shop around, because for your specific situation, they might not be the bargain you expect. So, who is the ideal Geico customer? It's the driver who prioritizes their wallet above all else. It's the person who is comfortable and confident managing their entire financial life through an app. It's the individual with a clean driving record who wants to be rewarded for it with a rock-bottom premium. If you're a federal employee or active or retired military, you can stack their affinity discounts on top of everything else, making the deal even sweeter. For this person, Geico is almost a perfect fit, an efficient, affordable, no-frills utility. Geico is a true American success story, a company that took a brilliant, simple idea, executed it flawlessly, and with the help of the world's greatest investor, grew into a household name. They democratized low-cost insurance for the masses. The trade-off, however, is often in the realm of personal service. You save money, but you sacrifice the guiding hand of a dedicated agent. It begs the question, is there a middle ground? Is there a company that can compete on a massive scale like Geico, but still offer that local personal touch? A company that built its entire brand not on a gecko, but on the promise of being right there in your neighborhood when you need them most. That brings us to our next contender, a company that wants to be more than just your insurer. It wants to be your neighbor. State Farm. The name itself feels solid, foundational, like something out of the American heartland. And that's exactly where it comes from. This isn't some tech startup born in a Silicon Valley garage. State Farm was founded in 1922 by a retired farmer named George Metchelly. His idea was simple, almost revolutionary at the time. He believed that farmers and small-town residents, who drove less and had fewer accidents, shouldn't have to pay the same high insurance rates as city dwellers. He wanted to create an insurance company based on fairness, integrity, and mutual trust. An insurance company for his neighbors. That philosophy, that core DNA, is the single most important thing you need to understand about State Farm. While other companies were racing to build the biggest call centers or the slickest apps, State Farm was doubling down on a model that feels almost old-fashioned: the local agent. This is State Farm's superpower, and it's also its most defining characteristic. With over 19,000 agents across the country, their entire business is built around having a physical presence in your community. This isn't just a marketing slogan, it's their operational blueprint. The person you buy your policy from isn't a faceless voice in a call center thousands of miles away. They're a small business owner who lives in your town, whose kids might go to the same school as yours, who you might see at the grocery store. So, what does that mean for you in practical terms? It means when you have a question, you call your agent. Not an 800 number. When you need to file a claim, you call your agent. When you get married, buy a new house, or have a baby and need to adjust your coverage, you have a single point of contact, a dedicated professional who understands your entire life situation. Think of it like having a family doctor for your financial protection. Instead of explaining your history to a new specialist every time, you have one person who knows your story, your needs, and your goals. Let's play this out. Imagine you're in a complicated accident. It's not a simple fender bender. There are multiple cars involved, conflicting stories, maybe even an injury. The stress is immense. With a direct-to-consumer insurer, you call a claims hotline. You'll probably speak to a different person every time you call for an update. You're just a policy number in a massive system. Now imagine that same scenario with State Farm. Your first call is to your local agent. Let's call her Brenda. Brenda knows you. She knows you just bought that car 2 months ago. She knows you have a spotless driving record. She doesn't just process the claim. She guides you. She explains the next steps in plain English. She helps you arrange a rental car. She advocates for you with the claims department. She is your coach and your champion in the corner when you need one most. For millions of people, that human-centered support during a crisis is worth more than any potential savings. This focus on relationships naturally leads to State Farm's other major strength: bundling. They don't just want to sell you auto insurance. They want to be your one-stop shop for auto, home, renters, life, and even banking and investment products. The discounts for bundling, particularly home and auto, are often substantial. They are one of the market leaders in the multi-policy space. This strategy is brilliant because it does more than save you money. It deepens that relationship. The more of your financial life that is tied to your State Farm agent, the less likely you are to shop around for a slightly cheaper auto quote next year. It creates a powerful sense of loyalty and simplicity, and you can be confident that they'll be there to pay the bills. State Farm is a financial behemoth. They are the largest auto and home insurer in the United States. They consistently receive the highest possible financial strength ratings from agencies like AM Best, meaning their ability to pay out claims, even in the face of widespread catastrophes like hurricanes or wildfires, is virtually unquestioned. This isn't a small detail. It's the bedrock of what an insurance company is supposed to provide. A promise that the money will be there when you need it. So, the agent model is incredible, the bundling is fantastic, and they are financially rock solid. It sounds perfect, right? Well, this is where we have to have an honest conversation about the trade-offs. That personalized, human-powered service model costs money. All those local offices and dedicated agents represent a significant overhead that a company like Geico, with its centralized call centers, simply doesn't have. And that cost is often reflected in the premiums. State Farm is rarely the cheapest option on the market. If your number one priority is finding the absolute lowest price, and you're a savvy shopper with a clean record, you will likely find a better deal elsewhere. What you're paying for with State Farm is the service, the relationship, the peace of mind. It's a value proposition, not a price proposition. The second potential downside is the flip side of their greatest strength: the agent model itself. Your entire State Farm experience hinges on the quality of your specific agent. A fantastic, proactive, and knowledgeable agent can make your life infinitely easier. But a mediocre, unresponsive, or inexperienced agent can create a bottleneck of frustration. Because the agents are independent business owners, the level of service can vary from one office to another. One agent might be a tech-savvy whiz who responds to emails in minutes, while another down the street might still prefer faxes and phone calls. Before you commit, it's crucial to research and even interview your local agent. Check their Google reviews. See how they run their office. Your relationship is with them as much as it is with the larger State Farm brand. Finally, while they have made huge strides, State Farm has sometimes been perceived as playing catch-up in the technology department. Companies like Progressive and Allstate have often been first to market with cutting-edge telematics programs and ultra-slick mobile apps. State Farm's app is good, it's functional, and it gets the job done. You can pay bills, view your ID cards, and start a claim. But for the digitally native consumer who wants the most advanced, feature-rich, app-based experience, it might feel a bit more traditional compared to the tech leaders. So, who is State Farm the perfect fit for? It's for the person who values relationships over rock-bottom prices. It's for the family that wants to simplify their life by having one trusted advisor for their home, their cars, and their life insurance. It's for the individual who, when disaster strikes, wants their first call to be to a familiar name and a friendly voice, not an automated phone tree. It's ideal for homeowners who can unlock those massive bundling discounts and create a comprehensive safety net. Who might want to look elsewhere? The hardcore bargain hunter. If every dollar counts and you're willing to manage your own policy online to save money, State Farm will likely be too expensive. It's also probably not the best fit for the tech-obsessed driver who wants the latest and greatest telematics program to gamify their driving for the biggest possible discount. And if you're just looking for a simple, single auto policy without any other needs, you won't be able to take advantage of their biggest strength, the multi-line bundle. Ultimately, choosing State Farm is a conscious decision to invest in human-centric service. It's a bet that when things go sideways, the value of a trusted neighbor will far outweigh a few dollars saved per month. They have built an empire on this promise, becoming a true icon of the American insurance landscape. But what if you want that massive scale, that household name recognition, but with a slightly different approach? What if you want a company that blankets the airwaves and is known for being in good hands? That brings us to one of the oldest and most recognized names in the entire industry, Allstate. For over 90 years, the slogan "You're in good hands" has been more than just marketing. It's been a promise. A promise of stability, of presence, of a physical agent in your town that you can actually walk in and talk to. Founded in the 1930s as part of Sears, Roebuck and Company, Allstate was literally born from the idea of selling insurance through the mail, a revolutionary concept at the time. Now, it's a titan of the industry, a household name with a massive network of local agents spread across the entire country. But in an age of apps, algorithms, and instant quotes, does this old-school model still hold up? Or is it a relic of a bygone era? The answer is, it's complicated, and it reveals a fundamental divide in what people actually want from their insurance company. Let's first break down what Allstate brings to the table, because it's a lot more than just a friendly face. Beyond the standard liability, collision, and comprehensive coverage, Allstate heavily leans into add-ons and specialized features that cater to a driver who wants more than just the bare minimum. Take their new car replacement coverage. If your new car gets totaled within the first 2 model years, they won't just give you the depreciated value. They'll give you the money for a brand new one. That's a huge peace of mind feature for anyone who just drove a shiny new vehicle off the lot. Then there's accident forgiveness. With Allstate, your rates won't go up just because of one accident, even if it's your fault. This is a powerful benefit, but you need to read the fine print. It's often earned through a period of safe driving or purchased as an add-on, but for those who qualify, it can save thousands over the long term. And of course, we have to talk about DriveWise. This is Allstate's answer to the telematics revolution, and it's one of the most established programs out there. You plug in a device or use their mobile app, and it tracks your driving habits. We're talking about things like your speed, how hard you brake, the time of day you drive, and your total mileage. Drive safely, and you can earn significant discounts and cash back. Drive like you're in a Fast and Furious movie and, well, it won't raise your rates, but you certainly won't be getting that discount. This is Allstate's attempt to blend their traditional model with the data-driven approach of their more modern competitors. So what are the undeniable strengths of choosing a legacy carrier like Allstate? The single biggest advantage, the one that defines their entire brand, is the agent network. For millions of Americans, insurance is confusing and intimidating. They don't want to navigate a complex website or talk to a different person in a call center every time they have a question. They want to call their guy. They want a trusted advisor who knows their name, knows their family, and understands their specific situation. This agent can help you untangle the complexities of your policy, advocate for you during a claim, and proactively look for discounts or coverage gaps you might not be aware of. If you're bundling home, auto, and life insurance, having one point of contact for everything can be incredibly valuable. This isn't just insurance. It's a professional service, and for many, that's worth paying for. Another major pro is the sheer breadth of their offerings and financial stability. Allstate is a financial fortress. They consistently receive A+ ratings from agencies like AM Best, which means when a major catastrophe strikes, a hurricane, a wildfire, a massive hailstorm, they have the capital to pay out all their claims without breaking a sweat. This is not a trivial point. You are paying for a promise, and Allstate has a 9-decade track record of keeping it. Their comprehensive list of discounts is also a plus, from the standard multi-policy and good student discounts to more unique ones like their early signing discount, or the one for having anti-lock brakes and anti-theft devices. However, this is where we have to have an honest conversation about the trade-offs. The Allstate model comes with some significant potential downsides, and the number one issue for most people is price. That massive network of agents, the brick-and-mortar offices, the colossal advertising budget featuring Dennis Haysbert and Mayhem, that all costs money. And that cost is often passed on to you, the customer. When you run a quote from Allstate against a direct-to-consumer company like Geico or Progressive, Allstate is frequently the more expensive option, sometimes by a significant margin. You are paying a premium for that personal service and brand recognition. The second major con is the inconsistency of the customer experience. Because Allstate operates on a semi-franchise model, your experience isn't really with Allstate as a monolith. It's with your specific local agent. If you get a fantastic, knowledgeable, and responsive agent, your experience can be world-class. They'll be your champion. But if you end up with an agent who is overworked, inexperienced, or just not very good at their job, it can be a nightmare. Your satisfaction is almost entirely dependent on the quality of that one individual or office, which creates a kind of lottery that you don't have with a centralized, direct-to-consumer model. This extends to the claims process as well. While Allstate has a claim satisfaction guarantee, in some states, customer satisfaction surveys from sources like J.D. Power often place Allstate in the middle of the pack, not at the top. Some customers report a smooth white glove experience, while others describe a process bogged down in bureaucracy, slow response times, and initial lowball settlement offers. It's a mixed bag, and that variability is a risk you take on. So, who is Allstate actually for? The ideal Allstate customer is someone who prioritizes relationships and guidance over rock-bottom prices. This is the person who wants a one-stop shop to handle their car, their house, their boat, and their life insurance. They want a professional they can call who already knows their entire portfolio. They are likely more established, perhaps a homeowner with multiple assets to protect, and they see insurance not as a commodity, but as a crucial part of their financial planning. They're willing to pay a bit more for the peace of mind that comes from having an expert in their corner. Conversely, Allstate is probably not the right fit for the budget-conscious shopper whose primary goal is to find the cheapest possible rate to stay legal. If you are tech-savvy, comfortable managing your own policy online, and prefer the efficiency of an app over a phone call, the value proposition of a local agent might be completely lost on you. Why pay for a service you don't need or want? For the young driver, the student, or the person with a simple insurance situation, the premium price tag for Allstate might simply not be justifiable when other, cheaper options are just a few clicks away. Ultimately, choosing Allstate is a vote for a particular philosophy of insurance. The belief that a human relationship and expert guidance are worth a premium. It's a bet on the value of a local advisor in an increasingly digital world. For some, it's an outdated and overpriced model. For others, it's the only way they'd ever want to handle something as important as protecting their family and their assets. So now we've journeyed through the landscape. We've met the gecko with its promise of speed and savings. We've seen the relentless marketing machine of Progressive and its direct, data-driven approach. We've explored the member-focused world of USAA, a walled garden of incredible service for a select few. And now we've examined the legacy giant, Allstate, the bastion of the traditional agent model. We have 4 distinct philosophies for different promises, for unique sets of strengths and weaknesses. But there's one more contender we have to talk about. A company that tries to blend the best of both worlds. The scale of a national brand with the feel of a local community partner, famous for its jingle and its neighborly promise. After that, it's time for the final showdown. We'll take all 5 of these titans and pit them against each other directly, comparing them across the metrics that matter most: price, claim satisfaction, customer service, and unique features. We'll finally answer the ultimate question: which company offers the absolute best value for your hard-earned dollar? Let's start with the heavyweight title fight: price. For the title of King of Cheap, the 2 contenders almost always stepping into the ring are Geico and Progressive. For years, their entire marketing strategy has been built around saving you money. If you're a young driver with a clean record, or someone who just needs basic liability coverage to be legal, these 2 are your mandatory first quotes. They've mastered the art of the low-cost, direct-to-consumer model. But here's the multi-million-dollar catch: cheapest is a moving target. The company that's cheapest for your 22-year-old cousin in Ohio might be the most expensive for you in California. That's why, while Geico and Progressive often win on pure price for the average driver, State Farm can sometimes pull a surprise upset, especially if you qualify for a bundle with home or renter's insurance. Their agent model, while seemingly old-fashioned, can sometimes uncover discounts the online algorithms miss. So, for the price-only champion, it's a photo finish between Geico and Progressive, but you absolutely have to check both. But what happens when that low price gets tested? What happens at 2 a.m. on a rainy highway when you actually need the company you've been paying? This is where the entire game changes. This is the customer service and claim satisfaction round, and frankly, it's where the budget champions often get a black eye. While not terrible, the high-volume, low-margin models of Geico and Progressive can sometimes lead to a less personal, more automated claims experience. You might be just another number in a massive system. Now enter the undisputed titans of service: USAA and Amica. These 2 aren't just good, they are legendary. Year after year, they dominate JD Power rankings for a reason. With USAA, you're getting service built for the military community, efficient, respectful, and mission-oriented. With Amica, you're getting a mutual company, meaning they're owned by the policyholders, not stockholders. Their incentive isn't to squeeze every penny for Wall Street, it's to serve you. Filing a claim with them is consistently reported as being smoother, faster, and more empathetic. Allstate and State Farm land somewhere in the middle. Having a dedicated local agent can be a massive advantage during a claim, giving you a real person to call who knows your name. The takeaway is stark. If your number one fear is a nightmare claims process after an accident, the small premium you might pay for USAA or Amica is arguably the best money you will ever spend. Next up, unique features and technology. In an industry that can feel ancient, who is actually innovating? This is Progressive's playground. Their Snapshot telematics program was a game changer, and they continue to refine it. It's not just about tracking your driving. It's about offering a dynamic, personalized rate that rewards real-world safety. Allstate is right there with them with DriveWise, offering similar benefits and even cashback rewards. These programs are perfect for the confident, safe driver who is willing to prove it in exchange for a deep discount. Geico has its App and Drive Easy program, but it feels a step behind the pioneers. State Farm is also in the game with Drive Safe and Save, which is a solid offering, especially for families with teen drivers. Then you have the other side of the coin. USAA and Amica don't lean as heavily on tech gimmicks. Their unique feature is their service. It's the simplicity, the reliability, the human touch. So for the tech-savvy driver who wants to leverage their safe habits for savings, Progressive and Allstate are the clear winners. For the driver who wants technology to be invisible and service to be exceptional, USAA and Amica lead the pack. So after all that, who should you choose? There is no single right answer, but there is a right answer for you. Let's break it down by driver profile. First, the budget-focused driver. You're a student just starting your career, or you simply want the lowest legal payment possible. Your first 2 calls are Geico and Progressive. Period. Get quotes from both, play them against each other, and take the lowest rate. For you, every dollar counts, and these companies are built to compete for your business on price. Second, the family with teen drivers. You're navigating the terrifying reality of insuring a new, inexperienced driver. Look hard at State Farm and Allstate. Their good student discounts are often very generous, and their telematics programs like Drive Safe and Save can be a great way to coach your teen on safe driving while earning a discount. The ability to bundle home and multiple cars here can create massive savings that the budget carriers might not match. Third, the tech-savvy safe driver. You trust your driving skills and you want to be rewarded for it. You should beeline for Progressive and Allstate. Sign up for Snapshot or DriveWise. If you avoid heartbreaking late-night driving and speeding, you could see your rates drop by as much as 30%. You're betting on yourself, and these companies are willing to take that bet. Fourth, the military member or veteran. This is the easiest recommendation of the day. If you are eligible for USAA, your search should start and likely end there. The combination of competitive rates, unparalleled customer service, and a deep understanding of the military lifestyle is a package that is virtually impossible for any other carrier to beat. It's a benefit you've earned, and you should absolutely take advantage of it. And finally, the peace of mind driver. You make a good living, you value your time, and the thought of fighting with an insurance company after a traumatic accident is your worst nightmare. You are the prime candidate for Amica, and if not eligible for USAA, this is your best bet. You might pay 5 or 10% more per year, but what you're buying isn't just insurance. You're buying an ironclad promise of a smooth, respectful, and hassle-free claims process. You're buying peace of mind. So what is the one single universal truth that cuts across every single driver profile? It's this: you must shop around. Brand loyalty in the insurance industry will cost you thousands of dollars over your lifetime. The company that gave you the best rate 3 years ago is almost certainly not the one with the best rate for you today. Rates change, your life changes, and their risk calculations change constantly. Your action plan is simple. Before your next renewal, get a quote from at least 3 of the companies we've discussed. Get a quote from a budget leader like Geico. Get a quote from an agent-based company like State Farm. And get a quote from a service champion like Amica. It will take you less than an hour, and it could save you over $1,000 a year. And here's a pro tip for those who feel overwhelmed. Consider contacting an independent insurance agent. Unlike a captive agent who only works for one company like State Farm or Allstate, an independent agent works with dozens of different carriers. They do the shopping for you for free, and can often find niche companies that offer even better rates for your specific situation. Finally, make it a habit to review your coverage every single year. Did you get married? Did your credit score go up? Did you start working from home and now drive 5,000 miles a year instead of 15,000? Every one of these is a reason to call your insurance company and ask for a rate review. Don't just let it auto-renew. Take control. This journey through the world of auto insurance shows one thing clearly. The power is in your hands, but only if you use it. The knowledge you've gained from this series equips you to make a decision that's not just cheaper, but smarter. Now, I want to turn it over to the most valuable resource I have, this community. In the comments below, tell us, which insurance company do you use, and what has your experience, good or bad, been like? Your story could be the final piece of the puzzle that helps someone else save money and avoid a massive headache. Your one comment could make a huge difference. And if you found this breakdown valuable, and you want to keep making smarter financial decisions, make sure you subscribe, because our next video is one you can't afford to miss. We're going to be tackling the 3 biggest lies the auto industry tells you about extended warranties, and revealing the one time it might actually be worth it. Thank you for joining us on this deep dive. Stay smart, stay savvy, and never overpay for peace of mind.